I'm Mrs. Suriya Priya from BCom ISM department. Today we are going to see the topic that is cash flow statement, accounting standard 3. So first of all we are going to see the introduction about the cash flow statement. Here the cash flow statement we are able to find about what is the cash available in an organization. So cash flow statement provides the information about that is cash inflows and our cash outflows. Cash inflows means it is nothing but all the cash receipts, that is all the incomes, cash incomes and receipts will comes under, that is cash inflows. And next, that is cash outflows, that is cash payments. So during the particular period of the time, what are the cash inflows and outflows are happen in that particular period, we can determine with the help of that is cash flow statement. So in this cash inflows and outflows, we can able to find this inflows and outflows with the helpful of three activities. The first one is operating activities, second one is investing activity, and third one is financing activities. So what are the main objectives of this cash flow statement? So here we are finding what is cash available in an organization using a various activities method. As I said earlier, that is operating, investing and financial activities. From that we are ascertaining our cash flow. And this cash is a liquid asset, so the organization they are planning for that is short term period. And the third one, it is highly helpful to the organization to understand the liquidity position of their firm. And we can able to ascertain the cash management and cash efficiency we can able to find. And in case of any sickness in organization, shortage of cash, that time we can able to predict what is the availability of cash in our hand. And this is highly helpful for the budget preparation, and we can able to know what is the cash position in an organization. So these are the 7 objectives which is related to the cash flow statement. So now we are going to see the classification of business activities of inflows and outflows of cash. So 3 activities are involved. Under that we are going to see the operating activity. Under this operating activities, cash inflow and cash outflows we need to ascertain. So what are the cash inflows means, that is cash sales received from debtors, that is amount received from debtors, commission received, any fees received, brokerages, royalty, whatever the cash is coming into the organization in the following these ways, that is called as a cash inflows. Next is cash outflow. The cash purchases, payment to creditors and whatever the cash which is related to operating expenses, payment of wages, payment of income tax and payment of manufacturing expenses or comes under cash outflows. So these are the things are representing the operating activities. The next is investing activity. Investing activity we have to find out the cash inflow and also the cash outflow. So investing activity, it is mainly focused on that is assets. So whatever the asset we are purchasing, it's a outflow. When we are selling any kind of asset means then it is a cash inflow. So the cash inflows are, that is sale of fixed assets, sale of investment, that is long term investment, interest received, dividend received, any working capital we recovered. So the following items are representing under, that is cash inflows. By the time of sales, we sold that asset, the cash is coming into the organization, so only it's a cash inflow. Next is cash outflow. We are purchasing any fixed asset, we are purchasing out of cash, the cash is going out, so it's a cash outflow. So these are things that comes under investing activities. Next is financial activities. Financing activity also we need to ascertain what are the cash inflows and cash outflows. So cash inflow are, that is the issue of shares. By the time the company is issuing a shares in a stock market and the issue of debentures in cash and proceeding for the long term borrowings. Long term borrowings, that is debentures or bonds, something they are proceeding. So these are the 3 items will comes under, that is cash inflows. Next is cash outflow, that is repayment of loans and payment of loans and redemption of preference shares, that is repayment of preference shares and payment of dividend, interest paid out of loan and repayment of any finance or lease ability. So all these things are comes under, that is cash outflow. So this is the overall chart I have prepared for, that is cash inflows and outflows. The first is operating activity. Operating activity inflow, already I said earlier, whatever the revenue under the cash receipts, it just exceeds the cash expenditure, it's a inflow. If the expenditure exceeds the cash receipts, then it is an outflow. And come over to the investing activity, whatever this asset I am selling over, that is sale of property, plant and equipment, or any sale out of equity shares, or any repayment or any collection of loans, all the things will comes under, that is cash inflows in investing activity. And outflows are, that is purchase of property, that is plant, equipment, or purchase of any investment, or comes under investing activity. Next is financing activity, that is issue of shares or issue of equity shares, preference shares, debentures, bonds, any sort of shares or debentures or bonds we are issuing in a market, then it is comes under cash inflow. And outflows, that is repayment of loan or payment of dividend or redemption of any shares, or comes under, that is financing activities. The next, even though the three activities, we are having some limitations under this cash flow statement. So this cash flow statement does not show the liquidity position of the firm. The exact liquidity we cannot able to ascertain. It shows only what is the cash position. And second one, it is not a substitute of, that is income statement, which is our profit and loss, and it does not represent the financial position of our firm. So next we are going to see the distinguish between the cash flow statement and the fund flow statement. So on the basis of accounting, the cash flow, we are able to determine what is the cash is available in an organization and through the accounting. In fund flow, we can able to ascertain what is the working capital in an organization. So working capital is day-to-day expenses. We need some capital to run an organization, is called as in working capital, that we can able to find with the help of fund flow. Next, on the basis of significance, the cash flow is a liquid, cash is a liquid asset, so it is, we are planning for the short term period, and the working capital, it falls under the long term financial planning. And next, on the basis of schedule of changes in working capital, so in cash flow statement, we never find any schedule regarding that changes in working capital, but in case of fund flow statement, we will find out the changes in working capital and we separately. And next, on the basis of causes of variation, we can study only the cash variations in the cash flow, and we can able to find the working capital variation and changes in the fund flow. Now we are going to see the preparation or statement of, that is cash flow. So how we are going to prepare the cash flow statement under this three activity, that is operating activity, investing activity and financing activity. So by the time of preparation, we need some source of information. We need to collect informations from the comparative balance sheet, income statement or any other additional informations. And these three activities we can do it with the two ways of method. One is a direct method and another one is an indirect method. So this is a format for to ascertain the cash flow from operating activity. So first we saw, no, that is operating activity. So this is a format. So first we need to start our problem from, that is net profit before tax and extraordinary item, which will be given in our problem. So that only we have to start, and next we need to add all the non-cash and non-operating items. So all the non-cash and non-operating items, certain items we need to add and certain items we need to subtract. So what are the items we need to add in a sense? That is depreciation on fixed asset, interest on borrowings, preliminary expenses, underwriting commission, discount on issue of debentures or shares write-off, goodwill write-off, patent, trademarks, copyright, anything is amortized. All the amount we need to add. And next, loss on sale of machinery or plant and machinery, land and building, investment, or any loss it's occurred on that by the time of sales, we need to add. And next is premium payable on redemption of preference shares. So these are the items we have to add. These are non-cash items. So that we have to add. And next is we need to subtract the income, that is interest on income or any other income, dividend income, and discount on redemption of preference shares, and profit on sale of machinery. So profit on sale of machinery or land and building, investment, or any other asset, the profit you earn, that we have to subtract. So next, from that net profit before tax and extraordinary item, the certain non-cash item we have to add, and certain non-cash item we have to subtract to find out the operating profit before working capital changes. Next, we need to find out what is the working capital changes. So in that working capital changes adjustment, we need to find out that is changes, we need to predict that is changes in current asset and the current liabilities. So what are the items we need to add? In a sense, increase in current asset and decrease in current liabilities we need to add, and increase in current asset and decrease in current liability we need to subtract. So this changes we need to find out, and we need to adjust with the operating profit before working capital changes, and this adjustment we need to adjust to find out that is cash generated from operations. After finding this cash generated from operations, next we need to subtract our income tax. After subtracting the income tax, we can able to find out the cash before extraordinary item. After that, again we have to subtract the extraordinary item to find out the operating activities, that is cash inflow or outflow from the operating activity. If the answer is coming in a positive, then it is an inflow. If it is a negative figure, then it is an outflow. The next we are going to see the cash flow from investing activity. So see here, that is we need to start from, that is proceeds from, that is disposal of fixed asset. Any of the fixed assets we are selling, that is sale of machinery, sale of land and building, sale of furniture and fixtures, sale of investments, or any sale of goodwill, patents and trademarks. All the sales we need to record, and we need to add the non-operating income from the investments. That is dividend from shares, we received dividend from shares, or interest received from debentures, or rent received from any property. So all the incomes we need to add. And after that we have to subtract the non-current assets which we purchased, that is purchase of machinery, purchase of land and building, purchase of furniture and fixtures, and purchase of investments, and purchase of goodwill, patents, trademarks, or etc. So from that sales, and we have to add our non-operating income to ascertain one amount. From that we need to subtract the purchase of non-current assets. After that we will able to find out our investing activity amount. If the answer is coming in a positive, then it is a cash inflow. If it is negative, it is a cash used in investing activities. Next is cash flow from, that is financial activity. We need to start from, that is proceeds from issue of share capital and borrowings. So any kind of issue made on equity shares or preference shares or debentures we need to record first. After that we have to subtract the buyback of equity shares, redemption of preference shares, redemption of debentures, interim dividend we paid on equity shares, final dividend paid on equity shares, and dividend paid on preference shares, or interest paid on debentures, or any interest paid on bank loan, etc. So all the things we have to subtract to ascertain our financial activity. If again here also, if it is a positive figure, it's a cash flow from financial activity. If it is a negative, it's called as cash used in financing activity. So these are the ways to find out the operating, investing and financing activity. And next, from this three activities we need to find out what is the cash at the end of the period. So this is a format to prepare the cash flow statement. So first we have to specify the cash flow from, that is operating activity, and next we have to write our cash flow from investing activity, and next we have to write our cash flow from financing activity. So all the activities amount we recorded and we have to put total, and we need to find out that is net increase or decrease in cash. If the answer is in positive, then it is a net increase in cash. If the answer is in negative, then it is net decrease in cash. After that, we have to record our cash at beginning of the period, that is last year cash amount, that is beginning of the year, that is the financial year starts from, that is 1st April to 31st March. It ends on 31st March. So 1st April, what is the cash position? That 1st April cash beginning period we have to add along with this net decrease or increase cash to find out that is cash at the end period. So this is our cash in the end of the period. So this is a format to find out the cash flow statement. Thank you all.